Thank you, and thank you so much for the very kind invitation to join today's roundtable on a very interesting, complicated, and highly debatable topic of central bank digital currencies. I have prepared, I would say, an extensive presentation because of the complexity of the topic. However, I'll try to condense it to approximately 30 to 40 minutes, which will give enough content, but at the same time, enough time to spark, hopefully, a very fruitful discussion. Also, I would also recommend, if possible, that you can put some questions on the chat, which I can also check and respond to the best of my knowledge. And also, I'm happy to share the slides through the organizers later that you can also have as a reference. So what I'm going to do today is I'm going to make a broad introduction in relation to central bank digital currencies, as we know them as CBDCs. Talk a little bit about the technical characteristics, the types and attributes. What's the current global status in relation to central banks exploring, experimenting, launching, or even canceling CBDC projects? What are the mainstream discussions? And I think that's the main topic that I would be very keen to also share with you, and also some emerging discourses revolving around central bank digital currencies, and particularly the retail version of CBDCs. Some personal views based on my research, my own experience, my interactions with the global fintech community, some final points of consideration, and then, of course, our lively Q&A. So to go straight into the point, I think that the main discussion and the main push for central bank digital currencies is the fact that numerous banks around the world have been feeling that they are under threat. They want to remain relevant, and also they want to make sure that they are competitive against private coins, cryptocurrencies, other types of emerging payment systems. So the issuance of these CBDCs at a state level or at the supranational level, as it's happening currently in the discussions with the digital euro in the EU, they want to bring some sort of a sense of stability, some sense around mitigation of uncertainties, especially in relation to decentralized crypto, bringing back the discussion to central bank digital currencies and fiat currencies. So to really try to help you understand, when we talk about CBDCs, it's all around a digital form of a country's fiat currency, which will be backed, regulated, and administered by governments and, of course, the central banks, that to work either on a national or a supranational level. So basically, it's a liability of the central bank. Different jurisdictions have different goals, different scopes. They approach this in a very different way. They also consider issues in relation to geopolitics, economic specificities, monetary policies, and so on. And the reason why central money is important, because they are used for settlement of transactions. They actually minimize risk when it comes to making payments. They are used for intraday settlements, and also they maintain themselves as neutral. And of course, at the end of the day, they want to create safety, they want to create trustworthiness and operational efficiency of the payment system. CBDCs, I would say, are positioned in a nexus of four key pillars: traditional finance as we all know it, cryptocurrencies, or I would say digital currencies, monetary policies, and also technology. So all of these things, when they come together, they create multiple lenses, multiple layers of complexity, and multiple aspects of discussion in relation to CBDCs. So as I said before, think of it as a digital form of a country's fiat currency. Think of it also as a potentially new digital payment instrument, which is denominated in the national unit of account that is a direct liability to the central bank. Think of it like digital cash. That is represented as a claim to the central bank and not against a commercial bank or a payment service provider to the most part, but might be some cases that this direct claim goes into the financial intermediary. And also it tries to create a new way of settlements, a new way of payment infrastructures, which also connect with other types of payment systems. You probably might have seen this visual. It has been quite popular, that tries to position wholesale and retail CBDCs within the other types of money that exist currently. And I'm going to come back to actually explain what a retail and wholesale CBDC is. And as I mentioned before, the retail CBDC is the one that has been receiving so much attention, I would say mostly negative attention, but we'll try and also explain why this is happening. So really, I think we're looking into a combination of understanding the systemic implications of adopting a CBDC versus a simple response to the declining use of cash on the one hand. So there is this emerging discourse of shifting to a cashless society, and also the increasing or the pressure that central banks are being faced with because of the increasing use of private money, private payment systems, and also private or public decentralized crypto. So definitely, I think this innovation is pushing for more discussions in the payment space. At the same time, because of the emergence of all these fintech innovations, regulation is also changing quite a lot. So the notion of smart regulation calls for potentially new monetary instruments. And finally, there is always a discussion around financial inclusion. Basically, how do we ensure we reduce the number of underbanked and unbanked populations in the world? Now, I must put a caveat here that current research hasn't really drilled a lot into why and how CBDCs would contribute to the reduction of the increase of financial inclusion. So basically making sure that people are financially included. But this is something that has been cited as one of the key reasons why CBDCs deserve to be part of this new discourse. So the main drivers around CBDCs, I would say, could be crystallized across three key areas. Of course, on the one hand, enhancing existing banking infrastructure, so making sure that payment system, the way payments and transactions are settled, is done in a much efficient, effective, and faster way. I think also the privately issued stablecoins, which is a more of a light version of decentralized cryptocurrencies that are issued by a private entity. However, they are denominated or backed by a fiat currency or a basket of assets, so they don't depend on the sole supply and demand as mainstream decentralized crypto such as Bitcoin, Ethereum, and the likes. And also, I think the push from central banks to actually ensure institutional quality and innovation capacity, I think, create some sort of a futuristic approach of what kind of monetary systems and what kind of mechanism do we require to ensure that this could potentially operate in the near future. So, and again, I don't want to go into too much of the technicalities, which basically this particular visual, what does it do? It tries to summarize the discussion we're going to have, because again, we're looking at a technologically advanced representation of central bank money. So, for example, having the central bank balance sheet, which consists of foreign reserves, banknote and coins, securities, and other types of assets with, commercial bank deposits, and now CBDCs, and then connecting this to possible representations in relation to either being accounts at the central bank or being tokens. And then there are different types of potential representations, which are going to go a little bit more in detail later on. And that's, of course, again, it depends on the ad hoc jurisdiction. It depends on how every jurisdiction is looking at incorporating CBDCs and what kind also of characteristics and monetary policy they would like to push forward. So I think what literature is actually and policymaking has been citing as a value proposition of CBDCs, I would say greater financial access has been one of them. So basically allowing digital world to come closer to the users. Reduction of financial crime and unlawful acts and money laundering, because we're looking into a digital representation of fiat currency, which means everything will be digitalized, which means they can also be traced. So this notion of traceability and transparency, which is a double-edged sword, because it can lead also to issues of privacy, surveillance, and so on. Then I think it becomes more effective and efficient because it makes global trade, especially the wholesale version of CBDCs, makes things more efficient and effective and straightforward in terms of cross-border settlements. And also, I think, enhance regulatory compliance, because we see a combination of programmability, a combination of digital monetary policy, a new way to actually lead more of business and economic principles, which again, reading each one of them can have both positive and negative connotations, as we're going to look a little bit further. When we talk about CBDCs, we also have to think at the level of the nation, but also at the level of cross-border. So basically, at the national financial systems, we're looking into the fact that we've got multiple institutions requiring trust in order to transact. There are numerous trust intermediaries, which creates numerous issues, numerous complexities, inefficiencies, cost, and so on. And also that also leads to very slow transaction settlements. Therefore, what potentially CBDCs as a payment infrastructure, as a settlement infrastructure could do, could bring this notion of reconciliation, this notion of consolidation, which also could potentially be enhanced by the programmable nature of the network. Of course, that on the one hand brings visibility, accountability, and immutability of all transactions, because there will be in some sort of a permissioned ledger. And when I say ledger, I don't necessarily mean blockchain, but I would keep it at the level of a centralized ledger. However, at the same time, this could potentially lead into a single point of failure, which also can be very, very controversial as to the fact that we're looking at systems that can support also numerous situations to reduce risk. The international financial systems, I would say, we're looking at smart ways to bring and participate in deploying CBDCs for cross-border transactions. That means they could become a driver for economic growth. So basically, we'll be looking at using CBDCs as a means of settlement and as a way to actually do business and facilitate global trade through this cross-border collaboration, which also at the same time requires the establishment of standards, of experience, of expertise, and also using and sharing best practices. And also, which is also an experiment that the BIS, the Bank for International Settlement, is actually running, is actually how can you have interoperability between multiple CBDCs network. And I'm going to share in a minute how that could potentially look like, so you can actually cross collaborate in this kind of network. So such a potential private and permission system could look like this. So basically is a common ledger at the national level, at a payment system where you connect all these different stakeholders, from central banks to providers, to financial intermediaries, the client, the users, and so on. All of them looking at the same ledger, and that will be at the national or in the EU more into the supranational level. But when we go into the international financial system, as I said before, there has been some experimentation in relation to different models by the Bank for International Settlements in relation to multiple bridges of how can you actually bring CBDCs together. And this has been put together as a way to actually improve the governability of this kind of networks. And here we can see a couple of examples in relation to point-to-point connectivity, where domestic CBDCs exist independently, and then there is a bilateral connectivity, cross-border connectivity. That can lead, of course, to scalability challenges. Or there is another system which is around hub and spoke connectivity. Basically, central banks issue their CBDCs on a single common platform. So there is this notion of interoperability and reduces complexity. If anyone is interested, you may want to check the projects UBIN and Project Dunbar that the BIS, the Bank for International Settlement, run. And there is also additional thinking in relation to how such systems could bring further and facilitate further connectivity. Now, I think going back to the main discussion on CBDCs, I think a couple of things that prevail here is in relation to why would a country be interested in exploring CBDCs. So the desirability point, I think it's quite important. The policy design frameworks are quite interesting, with the fact that what kind of regulation, what kind of policy making is needed to create this foundation. Again, when we talk about fiat currencies, we have to remember that the fact that these fiat currencies are also the monetary pride of a country, which also needs to take into account the future of this and the international role of currencies. What kind of systemic implications does it have for business, for exercising monetary policy and the likes? And also the legal aspects. I think the legal aspects of issuance is one of the biggest issues in relation to how do you actually make sure a CBDC becomes the digital fiat of a country. So basically ensuring that people can have proper access and there is a legal binding approach into this. Another big question here is the architecture. So basically how people would actually access that, because we're looking at two layers here. We're looking at the layer of wholesale CBDCs and the layer of a retail CBDC, which I'm going to talk in a minute. So here, currently, the current discussion is branched across four key scenarios. The first scenario is a direct one, which again, it's a payment system that is operated by the central bank. It offers retail services. the CBDC is a direct claim in the central bank, and there is a central ledger that is maintained by the central bank. The central bank executes all the payments, and also the central bank or the financial intermediaries are responsible for KYC processes and onboarding. Now, this might sound very complicated. That's why we've got other types of potential systems. There is a hybrid one which consists of two engines. Basically, the retail payments are handled by financial intermediaries, whereas the wholesale payments are handled by the central bank that also maintains the wholesale central ledger. The direct claim of CBDCs is with the central bank, and also the central bank operates a backup technical infrastructure, whereas financial intermediaries are responsible for the onboarding and KYC processes. The intermediated approach, which again, you've got the wholesale ledger maintained by the central bank, but the direct claim is with the central bank. The retail payments are executed by financial intermediaries, and also they are responsible for the onboarding, including the KYC. So in this case, there is no backup technical infrastructure that is operated by the central bank. And the last potential scenario is the indirect or synthetic, where you've got an indirect provision of retail CBDC via financial intermediaries. So in this case, the claim of the CBDC is on the financial intermediaries and is not on the central bank per se. So the consumers technically are not allowed to direct access central bank money. The intermediaries operate all the retail payments, and also financial intermediaries perform onboarding, including KYC process. Again, these are different scenarios and different architectural designs that different central banks have been experimenting with. Definitely the infrastructure and particularly the ledger and the whole process of putting this together is very, very important. So it needs to ensure specific standards of security. It has to have the characteristics of the conventional centralized database. There might be some sort of a DLT approach, but I would say more of a centralized and permission versus a permissionless and open system. And also, what kind of access and permissions would users be able to have in this kind of networks? And of course, the biggest question here, which has also sparked the most, I would say, debates, is the two types, the retail and the wholesale. So basically, a retail CBDC is typically designed as a central bank liability that is accessible to individuals and businesses in the jurisdiction's financial system. Think of it like cash, for example. Now, a wholesale CBDC is a digitized central bank liability designed for significant transactions between banks and is held along or instead of traditional forms of central bank money, such as reserve balances. And also, let's not forget that CBDCs are domestically issued. So it will be at a national level. The only exception will be the digital euro, which will be at a supranational level based on the current conversations and current discussions. So retail is around payments between individuals and businesses or other individuals, and wholesale is only for interbank settlements for big transactions. Again, this is opening up numerous questions around the attributes. So basically, the retail version will be, think of it as a digital version of cash. It's mostly potentially a universally accessible medium of exchange and a store of value. Is this a sovereign currency, for example? Is it convertible one-to-one for other forms of money? Would it be considered as a legal tender? And then again, for the design, you may have different types of systems, from direct, intermediated, hybrid, or synthetic. You may have different types, such as an account-based or a token-based or a hybrid. It's also important to think about that currently all of these happen online. Is there a potential for an offline usability to ensure issues of systems that would actually break down? Again, it raises issues about the privacy. It raises issues about the role of cash. Whereas in the wholesale version, I think things are a bit more, if not really more straightforward and easier to explain, where here is an infrastructure for interbank settlements. This is accessible only by a limited number of participants, which are businesses. It's bank-to-bank payments and also real-time payment settlements on cross-border financial transactions. So this is around commercial banks, clearing institutions, or other entities that would traditionally have access to the bank reserves. So, and as I said before, most of the discussion currently is happening at the level of retail, which has also raised multiple questions, versus the wholesale, which is a more of a straightforward approach. So here I think on a retail CBDC, some of the key benefits that literature and policymaking has been citing is in relation to increased availability, streamline reconciliation because of the way the system will be operated, the digital innovation, which is around bringing this innovation capacity, and also an enhanced monetary policy. From a wholesale perspective, we're looking into improvements in interbank payment settlements. We're looking into reduced counterparty risk, especially when it comes to global trade or cross-border transactions. And also competitiveness when it comes to the national currency, and also participating in more interoperable digital asset markets. And without, and this is, as I said, I'm going to give you this slide. So this is just is more of a mapping, which I'm not going to go through around the different advantages and disadvantages. So this brings both the retail versus the wholesale version of CBDCs, and we'll see across different aspects of efficiency, of payments, of inclusion, of tech, and so on. So this is something you can look when the slides will be shared to you. Again, as I said, when we talk about different types of systems, it's really important to ensure security, to ensure availability of CBDCs, to ensure that the system is scalable enough to support the massive amount of transactions, instant payments. Probably you may have heard about the new developments within the EU that currently they are supporting instant payments, then payments that are settled actually below 10 seconds. Interoperability and also flexibility and adaptability according to the current circumstances. So just to sum up, when it comes to CBDCs, the features and capabilities, I would say that looking at the claim on a central bank, direct control, programmability, atomic settlement in relation to reduced settlement risk and less reconciliation, and also transparency, which again, it sparks both positive, let's say, ideas, but also very, very challenging questions in relation to ethics, to privacy, to all this kind of, let's say, invisible, but very, very straightforward, very, very, I would say, cornerstone aspects that also determine our society. The discussion around CBDCs has also sparked a lot of attention for private-public collaboration. So you see also numerous organizations such as, let's say, Visa or MasterCard operating platform as a service CBDCs, basically allowing sandbox approaches to test, do virtual testing, to assess, to check into the validation of use cases, look into interoperability, and also bring all these ecosystem stakeholders in a more of an orchestration approach. So you see also the fact that the private sector is coming in to support, public money. It's also quite important. Now, the other piece that I wanted to share with you is where do we actually stand? Because you may tell me, all right, I understand all this sound interesting, complicated, and so on, but what's the current status? So where does the world see in relation to central bank digital currencies? So this map comes from the CBDC Tracker, which is an interesting platform that is operated by the Boston Consulting Group, Platinion, and EY and Digital Euro Association. So they monitor and track all different projects across countries. Currently, we're looking at approximately 130 countries that represent 98% of global GDP are exploring a CBDC scheme. So in this particular map, you would see, first of all, launched. So basically countries that have officially fully launched a CBDC. You would see pilots, which are countries that have developed a CBDC that is tested in a real environment, either with a limited number of parties or on a wide scale. You would see proof of concept, which is countries that are in advanced research stage and have published a CBDC proof of concept. You would see research, which is in relation to countries that have conducted first explanatory CBDC research, and also canceled, which is countries that have canceled or decommissioned the CBDC project. So I'll just give you a little bit more, but you can look at this online. There is also another CBDC tracker facilitated by the Atlantic Council, and also another CBDC tracker which is facilitated by the Human Rights Foundation. So basically, here you can see that majority of jurisdictions around the world are in a research phase. We also see a couple of jurisdictions that are in the proof of concept stage. We see 4 project that has been launched, Jamaica, Jamaica, Nigeria with the e-Naira, and also the Bahamas with the Sand Dollar. They are retail versions of a CBDC, whereas the Zimbabwe one is more of a multi-purpose CBDC scheme. Also, we've got a couple of projects that has been cancelled in the Philippines, in Kenya, in Denmark, in Curacao, in Singapore, in Ecuador, and in Finland. Most of them have been at the retail scheme and type of a CBDC. And we also have numerous jurisdictions that currently are piloting different projects, both at the level of wholesale and retail, to explore what could that mean for their economies in relation to adopting and experimenting with CBDCs. Again, you may want to go to the CBDC tracker, any of them, and you can check the latest information. This actually, I took them this morning. Now, having heard about all that, I think it's really important to spend a little bit of time bringing together what are the current discussions globally. What are the key things that are associated with CBDCs? So basically, CBDCs, the reason why they're out there is because on the one hand, they want to bring digital transformation of traditional fiat currencies, also in response to the disruption and the evolution of other types of assets, other types of payments. So basically ensuring the sovereignty of national currencies in the digital world. I think also monetary policy deserves better innovation and protection. Therefore, this kind of questions definitely raise complex ethical and technical challenges. At the same time, I believe, and that's part of also my own thinking, is that CBDCs embody a paradox where they could either be a stabilized force or a vector for rapid systemic shocks, as we're going to see a little bit later. Now, I have chosen two very, very interesting quotes, one from Anguish Carstens, who's a general manager bank of international settlements, who said that the key difference with the CBDC is the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also we will have the technology to enforce that. This is a very powerful statement which can be read across multiple layers and lenses. And this can open up numerous opportunities, but at the same time, lots of challenges when it comes to especially the retail version of a CBDC. On the same, I would say, line of thinking, Bo Lee, who's the Deputy Managing Director of the International Monetary Fund, he said that CBDC can allow government agencies and private sector players to program targeted policy functions. By programming a CBDC, money can be precisely targeted for what people can own and what people can do. So again, I think that goes back into the control, the potential surveillance, the programmability of money, which raises also additional questions. So really, I think, and I mentioned before that the retail version of CBDCs has been one that has received most of the criticism because of the centralized nature, because of the way that the privacy concerns actually emerge in terms of the traceability, in terms of the compromise of the anonymity, which normally when you have cash are anonymous. There is also discussion that, and that goes beyond the retail version, is around the potential destabilization in the financial systems, with CBDCs potentially amplifying systemic fragility during economic crisis. So again, creating a monetary vehicle that would bring more instability versus stability. Negative interest rates, and again, would you have a CBDC? Would you have an interest rate on CBDCs? This is something that it hasn't yet been properly addressed. Also, there might be a question in relation to the disruption of traditional banking models because of the direct connection of people and businesses with central banks. So basically, that means diminishing deposits and constraining lending from financial intermediaries. Other questions, of course, are related to democratic principles, because of, especially in relation to the retail representation, because of the fact that it goes against basic human rights of anonymity, basic human rights of non-surveillance, of financial freedom. This creates also numerous aspects that so far haven't been properly addressed. I think the traceability is a big concern, especially because of the potential erosion of personal privacy, which for many is a cornerstone of democratic societies. The programmability of retail CBDCs is quite important as well, because not only it enables surveillance, but it actually enables the way of controlling the amount of CBDCs that would be available for each person. For example, it might be connected also with other aspects, let's say, of spending patterns, of ability to pay, of ability to connect, with insurance, with health. So all these things create more of a digital, I would say, twin of human beings, which can be controllable based on the programmability of CBDCs. So that creates also, I would say, more of a broader discussion around can and should monetary policy be programmable? What kind of centralization and utilization of money and consumer payments would be available, and also what kind of risk, political and geographical implications that would actually bring, especially I would say on the retail level. And again, I think the programmability also creates, as I said, issues in relation to human rights. As I said before, it goes against democratic ideals. Potentially also bringing authority to algorithms versus human intelligence and human decision making. So, all of these things create numerous discourses also in light, of a generative AI, of the powerful nature of algorithms. So it also creates issues around people not being digital proficient enough, financial illiteracy. How do you actually ensure that everybody's still inclusive and included? Because you may have biases in algorithms, which actually can lead to marginalization of different types of populations, and also can also create, different types of issues in relation to that would be put the democracy in danger. And also, it was very interesting because when the Human Rights Foundation launched the CBDC tracker, the unique focus of this particular tracker is how CBDCs will impact the civil liberties and human rights of people living under authoritarian regimes. 46% of the world's population lives under autocratic governments currently experimenting with CBDCs, including Belarus, China, Iran, Russia, Saudi Arabia, Thailand, and Turkey. So I think it's interesting to see a new lens into monetary policy, which is connected to human rights. And it's also very interesting because the Human Rights Foundation website, where it includes information about CBDCs and methodology and so on, it also has a piece where it says it can also facilitate a way for whistleblowers to submit sensitive information about government CBDC projects in a privacy protecting manner. So these are all interesting discourses that normally you wouldn't connect with monetary policy, but you see how advanced conversations and how numerous doors are being opened. A little bit around Australia. The Reserve Bank of Australia is more of a cautionary approach, I would say. They have been experimenting with the Digital Finance Cooperative Research Center, following an approach around understanding what CBDCs are and why, and if they would be relevant to the Australian reality. They've chosen 14 use cases, which are branched across 3 pillars: financial services, payments, and tokenized markets. And each selected use case has substantial potential for transformative innovation within the financial services delivery value chain and beyond. They have been looking into differentiation and diversification strategies, I would say, and they have been quite vocal of the fact that their main focus is on wholesale version of CBDCs, and looking also how other jurisdictions are exploring this particular approach. They haven't been vocal in relation to the retail CBDC, which I personally find, which is, in my opinion, which is very relevant because, as I'm going to share at the end of my presentation, in my opinion, retail CBDCs don't really fit well with the Australian reality, and that's something I'm happy to discuss. And also, what I also am interested to see, and I see this particularly with this kind of discussion, is the fact that we're looking into the RBA with the regulators playing more of an ex ante rather than an ex post attitude to innovation, which at the same time shows the importance of regulation, because to participate in this pilot phase, participants need to acquire regulatory approval from ASIC and AUSTRAC. Also, on a private layer, ANZ completed the first live transaction in Australia to use a general purpose CBDC. The bank tokenized its first non-currency based real world asset, which is called the Australian Carbon Credit Units, which was purchased using the Australian dollar stablecoin, the ACD, on a decentralized network, and subsequently retired by Grollo Carbon Ventures to voluntarily offset carbon emissions. Again, ANZ has been the first Australian bank that issued this DC payment through a public permissionless blockchain transaction in 2022. And ANZ delivered this stable coin for Victor Smorgon Group via ZeroCap, which is a private wealth management firm. So you see also discussions on CBDCs at a private level, which is more of a privately issued stable coins. So going towards the end of the presentation, I think looking at the future of CBDCs is, in my opinion, is all around balancing risk and opportunities. I think we're looking at mainly, as I said, the two types, the wholesale version and the retail version, with the wholesale version having more merit versus the retail version opening up numerous questions in relation to the fact that, is it actually a solution seeking for a problem, or is it actually something that can inherently and disruptively change the way money is considered and the way transactions are actually happening. Risk and opportunities for both is interesting, so it's important to take that into account in terms of the design. What's the value add? And I think that's the biggest question around why do we even bother, why it's important to even think about that. Also, that comes with a discussion in relation to the cashless society and the role of cash. As we said before, I think the collaboration between the public and private entities is an interesting one when it comes to strategic partnerships and bringing the private sector into the legal tender and the issuance of public money. That's a very interesting one. Again, regulation needs to speed up, needs to push further innovation in that space, especially when it comes to creating an interoperable regulatory clarity. And again, I think on a wholesale version, but on a retail version as well, geopolitics is very important, especially when it comes to the potential creation of CBDC, of regional CBDC clusters. So, in my view, that comes from my own research, my own discussions, and my own reflection. Definitely, central banks are seeking to preserve their established status quo, and also they need to start thinking on how to enhance current fiat currency and also to enhance monetary policy. I do believe of the interesting potential in the wholesale version of the CBDCs. I personally, especially when it comes to interoperability with various domestic and global platforms, I'm very skeptical in relation to the value add of the retail lens, which personally I think it revolves around the potential solution in search of a problem. In my opinion, the payment sector is not lacking innovation. I think the payments have been really under evolutionary transformation over the past couple of years. So I do find the incremental value of a retail CBDC quite questionable. Definitely, I don't believe on a retail version of a CBDC within the Australian reality, because I think currently the discussions around CBDCs and particularly retail CBDCs are really overhyped. They are massively pushed by numerous so-called advocates that, again, there is no real value add and there is no real problem to solve. We also have to think around what kind of society we're looking for, what kind of future we're looking for, what kind of finance culture we're looking for. That then would determine what kind of monetary policy and what kind of tools we need. And also, I think we're looking at the fact that also retail CBDC discussions take public trust and understanding for granted, that this cannot be assumed, especially when digital literacy is lacking. And also, I think the contextualization of CBDCs and retail CBDCs with human rights, it's really, really foundational here to actually ensure the preservation of personal agency, inclusivity, and the right to financial interdependence in the digital frontier era. And of course, I think we need to understand all these concerns. We need to accept all these concerns, and we need to see what's the level of democracy, what kind of values we need to bring, and also where do we see individual and human autonomy coming in. So finally, just some final points of consideration, which I know there has been a lot of content, but really I think there has to be a symbiotic relationship and cooperation between public and private stakeholders to understand and appreciate the potential value proposition of CBDCs. I think it's very important to see the conventional and the emerging payment systems, to see what are the current and anticipated consumer needs, what is the level of the required regulatory clarity, and also what kind of policy level innovation needs to happen. CBDCs, the way that I see them, it can be, as I said, a double-edged sword. It can be seen as a utopian way, as a vehicle for accessibility, inclusion, and democratization, or a dystopian way which can be a vehicle of control, surveillance, data exploitation, and money multiplication and manipulation. I would say the reality is probably somewhere in the middle. I would say I'm more straightforward to see where wholesale CBDCs sit. The retail version of CBDCs, at least within the current discourse, is very, very problematic. And again, as I think, and that goes across any kind of jurisdiction, there is a need for a constructive dialogue among all stakeholders to ensure not only the feasibility and desirability, but actually to understand what type of society we need, what type of money we need, and what type of financial culture it's foreseen across all the stakeholders. And with this, I'd like to thank you so much for the kind invitation, and I hope it was of interest, and I'm happy to engage into questions or a discussion. And also feel free also to connect with me on LinkedIn, and happy to discuss this further. And as I said, I'll share the slides with you through the organizers. Thank you.